The global economy is slowing down at a quickening pace. Despite analysts refusing to admit it, we have watched as indicator after indicator have shown very clearly that the global economy is weak. Stocks, on the other hand, particularly in the US, have done very well. With the Fed determined to create the next bubble, investors are trying to position themselves in a manner which allows them to ride this wave. Trouble is that oftentimes it ends badly for most. You came here for the truth, so let me unveil that for you. Today we are going to look at various factors including the stock markets, the financial markets, as well as the economy. I'm going to show you what's going on in Singapore. I'm going to talk about Europe. We'll look at China as well, and of course the trade issues that are going on today and tie that all in together. But first, I wanted to start with this. Right here, you're looking at Barclays, and the chart that they provided here gives you an idea of where they think these three possible scenarios of where the market might be at in the near future. We believe that the mini bubble scenario is now the most likely. You can see here the escalation, the mini bubble, and the recession. The highest probability here is the mini bubble, and that gives you a 65% probability that the SPX will be at 3260. Now, will it be there? That is not necessarily the case, but they believe that it will be up 10% from its current level. Now, that just shows you what one company believes we will be at. It is very, very difficult, in fact, impossible to predict what happens in the future. But there are always an unlimited amount of companies and individuals, analysts, that will tell you what the future has in store. They thought so in 2007, but of course it could happen in any direction at all. We never really know. It all depends on what's happening inside of the central banks. The central banks are ultimately determining what's going to occur. In this survey of more than 200 institutions controlling a combined $4 trillion of assets suggests that the bond rally is not a blip. This is very important out of the Financial Times. Check this out. The survey indicates that investors anticipate a 45% chance of global recession in the coming 12 months, the highest since the survey began in 2014. Investors have also shifted their views on where bond markets are headed next. The majority now expect short-term U.S. bond yields to be lower in a year's time, a reversal since March when more than half were banking on higher yields. We saw what Stanley Druckenmiller has talked about and other big names out there in where they predict the markets will be at, what's going to happen with bonds, what's going to happen with stocks, and so on. It looks like people right now are panicking. We have looked at the EPFR, the flows, to find out what is occurring with all of these different companies, what they have been seeing as well, with the investors actually pulling money from a lot of the growth stocks. We have seen in the Dow, for example, certain select companies that have done very well. You have other groups of stocks that have not done well. Okay, this is some stuff that I've been covering recently. And of course, we can never take one group or one individual's real decision on anything to be able to determine what's going to happen in the markets. We really don't know that information. They don't know either. They're not an oracle. They might be right last time, not necessarily this time. That's not really how we should be playing this. We should always be hedging our bets no matter what. Okay, so check this out. They talked about slowing growth and the impact tariffs are having on their cost. They're trying to pass it on. You're talking about the S&P 500, where 40% of revenues are sourced overseas, and overseas is slowing. They're obviously going to be hit. And this leads me into the next topic that I wanted to cover here. When you have a problem that's going on in another country, that's going to spill back over into yours, and that's simply because of the way this system operates. It is a matter of fact, and you can't get around it. Now, certainly some countries will be more shielded than others. There's no doubt about that, but this is impossible to escape. When the dominoes fall, it is a matter of time before they are all taken out. This article here out of Bloomberg, it gets into all the details of what is happening in Singapore. I'll show you some charts in just a second. Singapore's economy contracted sharply in the second quarter as exports continued to plunge amid a worsening global economy. This happens to be one country that usually is head over heels above the rest. They're always seemingly doing well, other than, of course, when there's a global recession and so on. This country here generally has a very strong currency, but right now, unexpectedly, as they say, it contracted, and that is having an impact based on what we have seen in other countries like China and so on here. GDP in the trade-reliant city-state declined at an annualized 3.4% in the quarter compared with the first 3 months of the year. That compared with the growth of 3.8% in the first quarter. Big changes going on for this particular country, and if you look at it in comparison to what you saw just previously, it seems like it's finally taking hold, the global economic slowdown in Singapore right now. This can change very quickly, of course, but at this time, this is where we're at. We'll see what happens in the next quarter. If we see some progress with the trade issues, then obviously this is going to have a good, real impact on what we're seeing in Singapore, but at this time, the trade issues seem to be mounting. Here is the GDP quarter over quarter, just showing you pulling down 3.4%. It's not the first time this has happened, but of course you can see that it is a rare event for Singapore. It doesn't happen too often. There have been a few times in history since the last recession where this has occurred, but of course it remains to be seen if it will be persistent like it was in 2008 and 2009. Lights out. Singapore exports dive on plunge in electronics shipments. So you're seeing the Singapore non-oil domestic exports year-on-year change, as well as the Singapore electronics exports year-on-year, and both of them are down into the negative. EU industrial production year over year, you can see how significant this has been. Since the Euro sovereign debt crisis, it hasn't been this bad, and it's been going on now for quite some time. I don't know how it was ever in the positive to begin with, but ultimately this is where we are at today. Look around the different countries in the EU, and it is just one after the other after the other. All of them seem to be slowing down. All of them seem to be suffering for their own issues, and it happens to be terrible levels of debt, not enough production, not enough consumption, and of course this overwhelming sense of deflation that is occurring. And they are trying to do business at the same time. They are regulating, they are constricting, and they are creating such a big mess. You have a country like Italy which is trying to say, let us grow out of it, let us take on big deficits because that's what we need to do at this time. We need some growth. And then you have the EU coming out there and saying, no, you can't do that. You must be restricted to the rules that we have set up. Then they're trying to create the mini-bot as a solution to the problem, and they're saying, no, you can't do that either. So there is a huge infight that is happening. You've got problems going on even in Germany right now. Germany being that country that they always say, oh, it's so strong, nothing bad ever happens here. But certainly we have seen a contraction there as well. If it persists, that's when it's a problem. If it's a blip on the screen, no worries. But if you have something that goes on quarter after quarter or month after month, if that starts to become a trend, then it starts to take the rest in the periphery with it. So pay attention, not just to the countries that you live in, but also those geographically associated with yours, as well as others all around the world. Look at the trading partners that they deal with. Look at the financial companies and how they are tied together. Most people don't understand this. They're only looking at maybe, for example, let's say it's the United States. They say, well, geographically, Mexico, Canada, we do a lot of business here. Maybe we got some business with China, and that's just about it. But you have to understand these financial companies, maybe it's JP Morgan, Goldman Sachs, any of these other big companies that buy up debt of other countries. They might buy up debt of corporations. They might buy into corporations. They might have assets that are connected in with these companies and these countries that are not doing very well fiscally, and other problems that they have. Maybe there's scandals, maybe there's all kinds of things that could really open up a real big problem for them in the future. China is definitely taking a beating right now. China's imports year over year, as well as China's exports year over year, both contracting here into the negative at this time. We've been watching what's going on with China. It's very clear. I know I don't need to beat a dead horse with this one. I wanted to show you this though. Out of the South China Morning Post, According to DHL, they are not seeing benefits from the trade issues from either US or China, according to this particular business. Tariffs are leading to slump in air and sea freight for key commodities, with the US and China both predicted to suffer a trade downturn as a result. And we've been watching this now for well over a year. And actually, I did a video really outlining all the trade issues and how far back they go. It didn't get many views, but of course, the more informative the video is, usually the less views it gets. How crazy that is. Logistics company DHL examined freight volumes for early cycle commodities such as bumpers for cars, touchscreens for mobile device, and brand labels for clothes. And what do? You get the real data, you get the information that you need to know. No, it's not all about the Federal Reserve, because they're not going to save you. They're not going to be there every time to backstop the losses. All you have to do is look at 2007. They did not save the economy in 2007. They did not save the economy in 2008. And quite frankly, they never did save the economy. They pumped up money into these financial assets. They bought the debt all around the world, different countries. Every single person, every single American should be pissed off at the Federal Reserve for taking money that's supposed to belong to you. They completely co-opted the whole thing to begin with. But regardless, they took money, they printed $16 trillion that we know about, and they gave it to foreign institutions. You bailed out indirectly, you don't know it, but this is what happened. They bailed out Canadian banks. Now, why in the world would they do that? They bailed out banks in every part of this world. You should be pissed off. You should not be thanking them. Overall trade slump for both the US and China. You can see China air trade, China ocean trade, US air trade, US ocean trade, all going down right now at this time. It isn't good. DHL is using a benchmark neutral of 50, just like you would have with PMI's manufacturing. More than 50 indicates trade is growing. Less than 50 shows that trade is shrinking. This just gives you an idea of where we are at. And for all of them, essentially, it is moving down, down, down. That is not a good sign at all. That's all for this video. I'm going to end it there. If you found it informative, please give me a thumbs up. When you give me a like, you are supporting me and this channel. I do appreciate that very much. If you want the financial education you were not taught in school, these two books have everything you need from top to bottom, A to Z. You can get all the details at the link in the description. If you want the audiobook, that's available at themoneygps.com. If you want to know what's happening with the economy, you got to watch this video. Don't go anywhere. Definitely click on it, and I will see you there.